guys, welcome back. You're still tuned into Trading Hour. For the market, we're currently seeing around an 80-point gain on the Nifty, so it's around 0.4% higher there. That so it's picked up significantly from where we started, and we had also reached almost the 18,200 level. So let's see how that moves from here. But for now, let's get a conversation going. Vikas Khemani, founder at Carnelian Capital Advisors, joins us now. Vikas, good morning and a very, very happy New Year to you. This is Pavitra. We have been talking about how India outperformed last year, but considering the kind of global setup that we are in right now, we have recession fears, we have the entire China opening. How do you expect next year to be, and do you think that the market could be sideways for a while?
Hi, Pavitra. Good morning and happy New Year to you and your entire team and your viewers. I think coming to markets, 22 was one of the best year for India from a global market perspective, but a flat year from an absolute return perspective, right? Very, very marginal return, right? And I think last year, we had said that it's going to be more likely the year of de-rating after a great performance in 21 and a modest earning growth. And I think if you see, probably the de-rating part is over. But this in 22 perspective, you will still see a moderate earning growth coming through because India is one of the best, fastest growing economy, and that will reflect into the corporate earnings. But it will be sort of a bit selective. There will be mix and match in terms of earning growth. So here, 2023, according to me, will be we are cautiously optimistic. From a market return perspective, you will have sectors which will do well. You will have sectors which will not do well. You will have lots of positive news, or you will also a mix of negative news. So you'll have tailwinds and headwinds, and all of them are going to be substantial. So from a tailwind perspective, if you see, I think fastest growing economy, corporate earnings growth, especially in some large sectors like banking and all continues, IT sector continues to do well. So those are there. Right, the fund flow situation, according to me, should be very favorable for emerging market in general and in India in particular. But from a headwinds perspective, I think we have major elections lined up in this year, which will be seen as a semi-final of 2024, and they might have a bit of volatility, or they might have a bit of impact depending on how it plans out. So that uncertainty will remain. The impact of actual increase in interest rates to some extent on demand will start playing out in this year. So you will see that impact on some segments coming about in the markets. So if I were to say this year is going to be reasonably again a year of sort of sector rotation, and a bit of a cautious has to be there. You will see plenty of up and down movements. While the trajectory would be up, but you will see fairly good amount of volatility throughout this year, and the volatility will remain, and that one has to be very careful when you are investing in this kind of market.
So Vikas, good morning and happy New Year to you. Hope this is your best one yet. I mean, you had a couple of really good years. Hope you continue that consistent performance. What are you looking at as a major trend for this year? I mean, the one big trend that a lot of people missed out on last year was PSUs, and particularly PSU banks. What do you see as the big trend of 2023?
Hi, Sonia. Thank you very much and wish you a great year. So I think, like I said, that one big theme will be, in my opinion, volatility. This year will be reasonably volatile year. And, you'll have to pick your sort of, stocks. I think, underdogs, which were ignored by the markets, and the earning tailwinds come, those are the kind of, stocks will do well. I think you will have to, to look again, I think banking will continue to do well. Because earning growth is there. IT will, according to me, despite all the concerns, will continue to do well because there is a reasonably good amount of growth. None of the companies guiding sort of slow down in the demand. That will continue to do well. Within that, of course, you have to pick your stocks. That's fine. One dark horse or surprising could be, we might have, the API and pharma stocks have, in some sense, or chemical stocks have sort of not done well in this year, while the long-term story remains sort of true, because the stock clearance and drop in the China price, and after a great year in 21, 22 did not do at all well for them, and they saw a lot of correction, but the long-term structure story is there. So according to me, that could be one sort of potential, we are still doing our work, but that could be potential space where you could see, it's a small space, but that could be a space where you could see reasonably good risk-adjusted return. So, you will find pockets, like in every market, this year also there will be pockets of interesting opportunity space, and that could be one from a little contrast standpoint of view.
A lot of people are betting on these infrastructure capital goods names ahead of the budget, and they believe that this budget, which will be the one ahead of the union elections next year, is going to be heavy on capex spend, which will augur well for the financials of these companies. Is this a trade which is yet to play out, or has it been played out? Because a lot of people off late have been talking about it. Is there alpha left in this whole infrastructure's, capital goods, stroke capital goods companies?
So I think both are two different segments, so to say. One is the private capex or industrial capex, and second is infrastructure capex. Both have to be played through different players, right? Infrastructure capex story has been in a while, playing out and being, but the specific things have started probably getting pushed in the railway space. And there, I think a little bit of aggressive capex has started happening, and some of the beneficiaries are there for us to see that. I think that theme will continue to play, and probably budget could be a little bit more accelerating that theme. Private capex space has been sort of, seeing momentum for last, year and a half specifically. And I think that will continue to remain so over the next 3-4 years. Of course, that's where you've seen the most amount of returns as well as the re-rating happening. So one has to be cautious about the valuation and the growth potential. Currently, I see a little bit of over-optimism and enthusiasm has got built into the capital goods stocks, which are leveraging the capex cycle. So one has to really see a bit of a sort of more caution. There will be moments of opportunity when those stocks will correct, and they correct. That time one is good level to get into, because the theme is structured, but one should be really cautious from a valuation standpoint.
All right, Vikas, we would love to chat some more, but unfortunately we're completely out of time. So hopefully we'll pick up on this conversation in a few days' time. But thank you very much for joining us and taking us through your call on the market. We have to get into a short break now, but there's lots more market action coming up for you in just a bit.